Hello everyone, and thank you for joining us today. Welcome to this presentation. My name is Stephen Primo. I am the president and founder of Specialist Trading, and as you see here before you, we are your premier site, online source for education and trading virtually all of the markets, from the stock to the Emini markets to the Forex markets as well. Now, just to give you a little bit of background about myself, I've been trading the markets for 35 years. I started out on the floor of the Pacific Stock Exchange. I was actually on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I've traded through just about every market environment imaginable, from the crash of 1987 to the bull market that ensued after that. So I've seen and heard just about everything. And roughly about 5 years ago, I got heavily into teaching, and Specialist Trading was formulated specifically just to share with you all the things that I've learned and gained in my 35 years of trading. And coincidentally, these are the same things that I use in my personal trading as well. Now, what we're going to be speaking about today is a simple pattern that signals a trend change. And this is a great tool to use because first of all, we all know the benefits of trading with the trend. The only problem is that most people do not know how to correctly discern what the trend is. So I'm going to show you how you can apply this pattern and virtually use it for any time frame in any direction and on any market. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using this particular pattern, but please remember that we can in no way guarantee that any of these results will be repeated in the future. So as you're taking a moment to view our disclaimer that we're required to show you, I'd also like to mention that I do like to take questions and answers. In fact, I love taking questions from our participants here, our attendees. But the way I like to give presentations is that I like to wait to the last 15 minutes of the presentation to answer any questions. So I know a lot of you may come up with some questions while I'm in the middle of the presentation, but if you please write them down, just wait a couple of minutes. Many times your questions are answered within the next slide, and other times you'll be able to ask me at the very end of the presentation. We'll have more time to go into detail. So please, I know a lot of people are coming in here a little late. I see some people coming in right now. But if you just joined us, please wait till the very end of the presentation to ask any questions. In fact, there's a little box here for me to see all your questions, and I won't even open it up till the very end. So just wait, and I promise I'll get to each and every one of them. If we happen to run out of time, which I don't think we will, I'll also give you an email address as well as a phone number where you can contact us at Specialist Trading to answer any questions you may have. Also, we'll tell you about some current discounts that we have in all of our strategies, okay? So thank you so much for that, and let's get on with the presentation. All right, here's what you're going to learn today. I'm going to share with you a simple but high probability technique for spotting trend changes in virtually all markets. So we're not just talking about something that works well for stocks or the E-mini, but the Forex as well. And we're not just talking about something that works on daily charts. This can work on intraday charts, on tick charts. It can work on monthly charts, and I'm going to show you a lot of examples and show you exactly how this does work. All right, here are the indicators you're going to be needing for this particular pattern that we're looking at. You're going to be using the 50-period simple moving average, and we employ this a lot at Specialist Trading. All you want to do is whatever chart pattern you're looking at, or I should say whatever chart time frame you're looking at, plot a 50-period simple moving average, okay? And it's probably best to remove all the other moving averages as well, just so you can focus on this. So just plot a 50-period simple moving average, and then we're looking for a specific pattern along with that 50-period simple moving average, and that's an outside day bar pattern, okay? That specifically is a 2-bar pattern. And for those of you who aren't familiar with what an outside day bar pattern is, let me show you a real simplified example of what it looks like. Well, first of all, let me just go through the definition. Outside days are the days where the chart bar is both higher and lower than that of the previous day. Okay, so that's what the 2-bar pattern is. In other words, we're looking for a bar that is the outside days are both higher and lower than that of the previous days. And we're talking about the range of the previous bar and the range of today's bar. Now, here's the example we were talking about, a real simplified example. As you can see here, here's the 2-bar pattern. We have 2 bars. The second bar, or the last bar, its range must be higher and lower than that of the previous day's range. Now, we're not interested where we close. As you can see here, we close towards the high, and in the next example, we close on the low. That really doesn't matter. We're not concerned with that. This is not some type of a candlestick pattern where we're concerned with where we open and close, creating some type of body. We're just concerned with the ranges, the high and the low. So the second of these two bars, the second bar must be higher and lower in range than the previous bar's range, okay? And in this example, we have the same thing except we close lower, but they're the same example, the same exact thing. Now, they come in different shapes and forms, but we'll go through a lot of examples. Mainly, the main thing we want to say is we're not concerned with the close. So a lot of our students, especially beginners, get confused as they say, well, we didn't close above the previous day's range. We're not concerned with that. Remember, the second day in this pattern, its range must exceed the previous bar's range, the high and the low, and that's all we're concerned about. All right, so now that we know that we're going to plot a 50-period simple moving average, and we're going to use this two-bar pattern, an outside day pattern, how is this technique implemented? How are we going to put these two together to show us when a high probability trend change is about to take place? All right, here are the rules now. Look for either bar of an outside day pattern, okay? Remember, either the first day or the second day, or the first bar or the second bar, to touch the 50-period simple moving average. So in other words, one of those two bars must be touching, intersecting the 50-period simple moving average. Once again, doesn't matter if it closes above or below. We're not concerned about that. We're only concerned with the range of that bar. So look for either bar of an outside day pattern, this two-day pattern, to touch the 50-period simple moving average. This is your signal that a short-term trend may be underway. That's it. At Specialist Trading, we try to keep things as simple as possible. And you're going to see, and what I've noticed in my 35 years of trading, is that it's the simplest things that seem to have the best track record, that seem to work the best, more than convoluted, logic and extremely complicated type of trading techniques. So look how simple this is. All we want is for either one of those bars to touch the 50-period simple moving average, and then that's your signal that a short-term trend may be underway. All right, let's look at an example here in IBM. This is going back a couple of months. As we see here, price was above the 50-period simple moving average. And then price came down. We see here we have this two-bar pattern. The second in the bar pattern, this is the outside day here. Its range is higher and lower than the previous day. And at the same time, this bar is touching the 50-period simple moving average. So this is our clue that we may get some type of short-term trend change. All right? Well, nothing really happens for the next 3 or 4 days here until, as we see later on, we have another of these patterns. The second bar in this pattern, its range exceeds the previous bar. It's higher and lower than the previous bar. And as well, both of these bars now are touching the 50-period simple moving average. And all we're concerned is just that one touches, but both of them are touching. So we've got two big clues here in the last week or so that there's going to be a big trend change in IBM. And as you can see, look what happened. 11 points to the upside starting the next couple of days. All right, so these were two tremendous clues that IBM was giving you, not that some chat room or some trader was giving you or some news that you were waiting for, some report on the economy. The market, the simplest thing itself, the market was giving you clues that there was probably, most likely, a short-term trend change about to happen. Here's another example in UPS. This is going back to the beginning of November. We see here that we're kind of oscillating above and below the 50-period simple moving average right here. And at this point, we have a two-bar outside day pattern. The second bar exceeds the range of the first bar. It's higher than the previous bar's high, and it's lower than the previous bar's low. And at the same time, the second bar is touching the 50-period simple moving average. So this, once again, is a clue in UPS telling us that there may be a trend change coming. Well, nothing much happens for the next 4 or 5 days, once again, but UPS gives us another clue, saying there's probably a very strong reliability, strong probability that there's going to be a trend change in UPS. Once again, we have an outside day pattern here, and now both of these bars are touching the 50-period simple moving average. As you can see here, all of a sudden, we had a quick trend change to the downside. This was just about a month or so ago. Now, here's the thing that most students get caught up with. They say, well, Steve, this is great. I love this technique. I see it in intraday trading. I see it in investing in long-term time frames. But how do we know which direction it's going to go? How do we find out, or how can we have a clue? So how can we know in advance the direction of a trend? Well, let's fine-tune this two-bar pattern to see if we can get on board the right side so we know which direction the trend will be. Therefore, we can look for setups to go long or to go short. All right, here's the fine-tuning. If the high or low of the outside bar, remember this is the second bar, if the higher low of the outside bar is exceeded on the next two bars, then the trend will most likely continue in that direction. Okay, let me repeat that again. If the higher low of the outside bar, this is the second bar in that two-bar pattern, is exceeded on the next two bars, then the trend will most likely, we're not guaranteeing it, but most likely continue in that direction. So let's look back on some examples with stocks and see how this can work. In fact, let's look back at those two stocks we looked at before, IBM and UPS. Now, originally we had the two-bar pattern right here, and so we're looking now for some type of clue as to the direction of this trend change. So we just want to kind of put some filters here, some benchmarks at the top and the bottom of this outside bar right here. So we have to either exceed it to the upside or exceed it to the downside in the next two bars. All right. Now these are daily bars, so we see in the next 2 days those ranges weren't exceeded. So right here there's no clue as to which direction IBM is going to be moving. But once again, the stock gave us another two-bar pattern. So we put brackets around the high and low of the outside bar. And then we want to make sure that either one of these, either the high or the low, is exceeded within the next two bars. Well, the next bar, the next day, nothing happened. But guess what? The second bar, we exceeded the top range. So that was our clue that IBM was most likely having a trend change to the upside. Now let's look at the other example we had in UPS. Remember, we had the two-bar pattern here. And here's where things can get difficult and confusing, especially to beginning members, but you have to be able to adjust and to be a little bit flexible, because many times the market will give you signals and then switch over and give you another signal. As in this case, UPS had the two-bar pattern here. So we put the brackets over the outside bar. And as you can see, on the very next bar, we broke to the upside. So at this point, UPS was telling us there's going to be a trend change, and most likely it will be to the upside. So at this point, you could have been looking for buy opportunities, signals and different strategy entry points to enter UPS. But guess what? Later on, as we see, we broke that upside bracket. Later on, we had another clue that there still is a trend change that has not happened yet. So we want to put the brackets on this one, okay, just to make sure that it's in sync with this upward movement confirmation. And guess what? The very next bar, we broke to the downside. So now things change. You have to be flexible and say, well, the market now has changed course, and it's giving me a clue that it's going to most likely go to the downside because we broke the bottom range of the outside bar. And that's where you had the downward move. Let's look at some examples of this in the Emini. Now, most of the people that trade the Emini, myself included, trade on intraday bars. So we can see some nice examples even on a 60-minute time frame. And this is going back to the end of November, just a couple of weeks ago, as we see price was above the 50-period simple moving average, and we came down lower and lower, and then we have this two-bar pattern. We have the first bar's range here, and then we have the second bar's range, which totally exceeds the top and bottom of the previous bar. So we have the two-bar outside day pattern. All right, but we still don't know which direction the trend may be. It may be straight up, it may be straight down. We don't know yet on this 60-minute time frame. So let's put our brackets right here. And we know that in the next two bars, if either one of those brackets is exceeded, that's most likely the clue, the direction we're going to be going. So as you can see on the very next 60-minute time frame, guess what? We broke the upper portion of that outside bar day, and look what happened. In the next 5-6 hours, it was 20 points to the upside in the E-mini. All right, this was just last November 28th. This was just a couple of weeks ago. Let's look at a tick bar chart, okay, 1,000 tick bar charts to show how well this transfers over into any time frame in any direction. We see here that price is below the 50-period simple moving average, but then when it comes back up to touch it, we have the two-bar outside day pattern, all right? The second bar, its range totally exceeds the upper portion and the lower portion of the previous day's range. So this is telling us a clue that most likely the E-mini on a 1,000 tick bar chart is going to have a quick change here in trend. But which direction? Well, we just want to put our brackets over the outside bar's range. That's the second bar here. And in the next two bars, we have to break one of these to make sure that, or to give us a clue as to which direction we're most likely going to be going. Well, as you see here, on the very next 1,000 tick bar chart, we broke the bottom portion. So that was our clue that most likely we're going lower on a short-term trend change. And guess what happens? Quick 5 points to the downside on the E-mini, And once again, this wasn't because some news came out. This wasn't because we were in some trading room or chat room telling us what to do. This was simply the market giving us clues. At Specialist Trading, what we try to do is keep things as simple as possible. When I was being mentored by my teachers and when I was on the floor, they always used to say, Steve, it's the easiest thing in the world to complicate your trading, but the most difficult thing in the world to simplify it. So what we teach at Specialist Trading are the simplest of tools, but these have stood the test of time. Let's look and see how this works on the Forex markets here. We have a daily chart of the British pound. This once again was going back roughly about August or September. As you can see, we're oscillating above and below the 50-period simple moving average. But at this point, we have the 2-bar outside day pattern, and the second bar is touching the 50-period simple moving average. So it's giving us a clue that there's a short-term trend change going to be taking place. So we want to put our brackets over the second bar, the high and the low of the second bar, and if one of those, the high or the low, is exceeded within the next 2 days, that will give us the clue as to the trend direction. Well, the very next day, guess what? We exceeded the high of the second bar. It doesn't matter where we close. All that matters is that we penetrate the high or the low of that outside day bar. As you can see here, we penetrated it to the upside, but then closed below. That doesn't matter. All we're concerned about is if we penetrated that upward bracket, and we did. So this was our clue that most likely the British pound is going higher. And guess what? 550 pips, or roughly about $500 to $600, or I should say, I'm sorry, $5,000 to $6,000 trading one of the Forex contracts. How about the euro dollar? On a daily basis, once again, we're oscillating above and below the 50-period simple moving average. We have a 2-bar pattern here, so we put the brackets on top of the outside day bar, and as you can see, on the second day, we exceeded the upper range, so this was a clue the euro dollar was giving us, telling us that we're most likely going to be going higher. But guess what? At the same time, when this day concluded, we formed another 2-bar pattern. So we could just make sure and confirm that we were either going to close either above or below this 2-bar pattern, and on the very next day, we penetrated and went below the lower portion of the bracket. So this was revised. Once again, you have to be flexible and kind of switch gears here on this trend direction. And so now the euro dollar is telling us most likely the trend will be down. As you can see, $8,000 to the downside in roughly the next couple of weeks or a month or so. All right, let's recap going over this tool now. Remember, this is a simple but high probability technique, very effective technique for spotting trend changes in all markets. Okay, as you can see here, it's mainly just for spotting a trend. Now, the indicators you're going to be using, once again, are just two simple tools here. A 50-period simple moving average. I want you to plot that regardless if you're trading a 5-minute bar chart of the Emini or a monthly chart of the Forex. It doesn't matter. Always have a 50-period simple moving average plotted on your screen. And then look for that 2-bar outside day pattern. That's it. If you look for the second bar, its range to totally exceed the previous bar. We're not concerned with where we close, or we're not concerned with if we close above or below the previous bar. All we want to know is make sure that the range of the second bar is higher and lower than the range of the first bar. And then we want to fine tune. Once we see that we have this pattern, we want to have a high probability directional move, and we want to know which way that directional move is going to happen. So if the higher low of the outside bar, that's the second bar of the pattern, is exceeded on the next 2 bars, then the trend will most likely continue in that direction. So you just want to put those little brackets on top of the outside bar just to make sure that they are broken, but it has to happen within the next 2 bars because we're really trying to catch momentum. It's the momentum of the trend change that is giving us the clue. Now, here are the points to remember. This is where students have trouble, and I'm sure many of your questions are concerning this right now because a lot of you think that this is a great strategy and you're probably going to go start looking for ways in which to implement this and start trading it tomorrow. But please remember, as I've highlighted here, this is not a complete strategy. In fact, it's not a strategy at all. It's best used as a directional tool. This is just a tool to tell you the direction which the market is going. And then once you know the direction, trade in that direction of the trend. In other words, apply this and by looking for signals in the direction of the trend. So you may have a strategy that you feel very comfortable with, or you may have a technique that you've learned from someone else, or you may have one of our strategies. Once you find this trend, Now you start to apply the strategy and look for setups using that strategy in that direction of the trend. Okay? Remember, you can apply this to any direction and any time frame. And let me show you how some of our students have been using this and how you could have used this as well. Here's an example just this last week, going up to, I believe this was up to yesterday, a chart of the Russell 2000 ETF. So this is basically showing you the market of the Russell 2000. And as you can see here, in the first week of December, we were rising in the Russell 2000 index. And as you can see, we were starting to oscillate above and below the 50-period simple moving average. Now at this point right here, we have the two-bar pattern. The second day, its range is higher and lower than the range of the previous day. So this is telling us that there's most likely a trend change coming in the Russell 2000 or the 2000 stocks made up of this market here. Now, we don't know which direction that trend is going to be, and we don't know how long it's going to be, but we just want to have some type of clue as to this momentum move. So we bracket the high and the low, as you can see here, of the second day. And we're not concerned if we close above these brackets here. We're just concerned that within the next 2 days, we either break the high or the low to tell us the direction. So this was roughly on the 5th of December. And as you can see here, on the second day, we broke it to the upside. So coming into the 13th, we had a really nice move to the upside. So once we broke this here, which I believe was on the 6th or 7th, you could have started looking for strategy triggers to enter. Now, this is not saying that you would have just gone long once we broke this to the upside. That's not what I'm saying. I'm saying that you have to have a strategy. You have to have some structure with rules for entry, rules for stop placement, and rules for exit placement applied, because now you know the direction of the trend. Well, for those of you who are members of Specialist Trading, you know that we had a very nice signal in the Mini Russell 2000 futures here on the 10th, which was just the beginning of this past week, to go long, and you would have made a quick 9 points in the Mini Russell had you taken our signal. So this is the way you want to use it. You want to only apply this technique I've shared with you today for finding the trend. But once you know the trend, then you have to use some type of strategy that you trust in to look for signals within the direction of that trend. And here was an example of what our members would have taken. If they were Emini members, they would have made roughly about 9 points trading one contract of the Mini Russell index. Another way students like to use this, even though I don't subscribe to this method myself, is for using it as a higher time frame confirmation and then going to a lower time frame to trade. In other words, here's a weekly chart of the euro-yen. Now this was going into the beginning, the middle of November. As we can see here, we're oscillating above and below the 50-period simple moving average, and then we have that two-bar pattern right here. We have an outside day of the previous bar, okay? So now that we know that the euro-yen is telling us there's most likely going to be a trend change on a weekly basis, we want to apply these brackets so we can get a clue as to which direction that trend change is going to be. So the very next week, we broke above, as you can see. And so since then, coming into the first week or so of December, we've had a very nice move to the upside, roughly about 500 pips or $5,000 from the point of entry. But this doesn't mean you would have entered there once we broke above. Remember, this is not a strategy. This was just telling you that you pretty much have confirmation that we're going to have a nice move to the upside on a weekly basis of the euro-yen. So what a lot of students now will go down to the lower time frame, which would be a daily chart of the euro-yen. And they'd start to look for buy signals trading our strategies on the daily time frame. And as you can see here, these are all signals to go long using our strategies. In fact, I believe this was strategy number 4, one of our best strategies we have at Specialist Trading, because 4 goes over and transfers over almost onto every market that we trade. So these are different ways in which to implement this tool, but if I can stress, once again, it's not a strategy. It's simply a tool to tell you which direction. Once you find the direction, then you can apply whatever strategy you're using to trade in that direction of the trend. I know a lot of students will say, well, Steve, I don't have a strategy. I'm not that far yet. Well, this is what we do at Specialist Trading. As you can see here, we provide you with the tools, the tips, and techniques for trading the stock market, the E-mini market, and the Forex markets. Each one of our different courses comes with upwards of 10 different and distinct strategies for trading that specific market. One of our best strategies, as I just said, and those were the examples I had showed you before, was strategy number 4. As we see here, this is the Emini strategy number 4, but we have strategy number 4 that fits all of the different markets. We have strategy 4 that trades for stocks. We have strategy 4 that also trades for the Forex markets. This is probably one of our most robust strategies around. It's given us some great signals in the last week or so in the current markets. And should you decide to become a member, we have some current discounts going along with all of our strategies. I know I see a lot of members here today that already have purchased strategy number 4, and that's okay. Should you want to upgrade to a different strategy, another course that we have, we are going to be, all the attendees today, going to be offering a $200 discount for all the people that currently have strategy number 4. But be sure to call up our office. I'll give you the email address as well as a phone number where if you're interested in purchasing one of our strategies, we have some great discounts going on for all of our attendees today. Remember, should you decide to become a member, you get instant course access. We give you a password, a username where you can go online instantly and find out the rules, a detailed instruction with 5 online videos. We show you all the entries, all the exits, and all the stops. We also provide you with signal alerts on a daily basis. So if you have a daily signal on a daily bar chart, we email you all the signals telling you where to enter and exit on the next day. I also provide you with weekly webinars where I give you different tools and techniques such as we did today to heighten your trading. We give you PDFs of all the rules so you can print them out and study them at your own leisure. And then finally, you get a personal email access. All of you will receive personal email access with myself. So should you have any questions concerning any of the strategies, you can email me at any time, and I'll get back to you as soon as possible. So these are great, great courses for trading any of the markets in conjunction with this great trending tool that we shared with you today. Now, for more information, if you're interested in getting more information on any of our strategies, you can go to our sister site, which is Pro Trader Strategies. They sell all of our strategies on an individual basis. You can also contact our VP of Operations, that's Brett Marsh, at brettm@specialisttrading.com. Or lastly, you can give us a call and contact us directly at 310-844-7220. Remember, we have some great specials going on right now in all of our strategies, strategy number 4 included, and call up and ask about those. They're only for a limited time, only for the next couple of days for the attendees. And once again, if you already have purchased strategy number 4 and you're interested in getting another strategy, we will offer all of our previous members a $200 discount in all the new strategies that you're interested in. Okay, as promised, we are at the question and answer portion. I'm going to open up the little question box just to make sure you may have asked something and you waited all this time. So Jerry asks, is that an engulfing? That's a great question. I think what Jerry is saying is that on the 2-bar pattern, is it an engulfing pattern? No, it is not. Remember, I don't know if you came in late, Jerry, but what we stated when we were describing that pattern is that it does not matter where these bars in that 2-bar pattern open or close the way engulfing patterns do. We're not concerned with that. We're not concerned with where the second bar closes or where it opened. All we're concerned about is the range. So if you wanted to, you could actually make the bars just range bars so that you know where the high and low of the ranges are. We're not concerned at all where they open, where they close. We just want to make sure that the second bar's range exceeds the previous bars. Okay? Is the breaking of the engulfing day break 2 in 2 bars? Remember, this is not engulfing, so I think I may have answered that question without going into the engulfing pattern. Whether broken to the upside or the downside to give a clue as to direction. Tom, I'm reading your question, Tom. Whether broken to the upside or downside to give a clue as to direction. Yes, I guess you're asking for that fine-tuning tool. Yes, in other words, when you apply the brackets to the outside bar's range, we're not concerned with if we close above it or close below. Within the next 2 bars, you just have to break those or penetrate either the high or low of that outside bar. Okay? That's your clue that most likely the trend is going in that direction. All right? I think that may be the question you're asking. Do you need any other confirmation? No, not really. I mean, remember, this is just a trend watching type of technique, so we're just concerned with trend here. So this is not something that we have to have precise and exact confirmation because trends can change. And then as you saw many times, we had that upward trend in the mini Russell, but now the market has sold off a bit. Even though we're still in some type of an uptrend, we're still looking for buy signals. At the same time, trends can change once we come down to that 50-period simple moving average. Steve, when the outside bar is exceeded by the next two bars, should you ideally wait for a retracement before entering parameters? Yes, that's a very good question. Parameter. Yes, you should wait for some type of retracement, but once again, what you really should be focusing on is that you have a strategy that gives you some type of entry rules, okay? And this is what we provide. Now, some of our strategies apply retracements. Others don't, and others just go with the flow of the market. So the point is, more importantly than waiting for a retracement, you should have some strategy already in place that trades in the direction of that trend. So in other words, say whatever market or stock or whatever you're trading gives you a signal to the downside, okay? And you have a particular strategy that you love. Say this strategy generates a buy signal. Well, I wouldn't take that buy signal. I would wait till the same strategy generates a sell signal because you want to trade in sync with the trend. So that's really what this is for. You have to have some type of structure already in place that tells you where to get in, where to get out, where to place your stop, and then trade in the direction of this technique that we just showed you, okay? This is what our strategies do. The examples I just showed you were actual trades that our members took that were trading in the direction of this trend. Next question is JJ is asking, how much is your course? Well, we offer a number of courses. We have somewhere close to 30. If you buy a full package, it's different from buying just one. I would suggest just sending an email or calling in because I don't know the exact discount. All of you are subject to getting a really nice discount by attending today, so I can't quote you an actual price on that. Okay, but it is a very good discount. I know sometimes our courses range in price from $400 or $500 up to $5,000, so it all depends on what you're looking for. Any more questions before we sign off? I really hope you can take advantage of this technique, but once again, this is a technique for the trend. As I said in the very beginning, this technique is often misused by a lot of beginners, especially because they think it's a strategy. This is not a strategy. This is a technique that's just simply giving you a high probability direction of the trend. Okay. Carlos is asking, Steve, can I use this technique, let's say, on the first hour chart or even a lower time frame early on the beginning of the trend and apply it to it later on to confirm the confirmation of the trend? Hypothetical question. Sure you can. So in other words, you're talking about what we talked about earlier, going from a higher time frame to a lower time frame. That's fine if you want to. Once again, I don't particularly use that technique. I just use the technique where if I see it on that time frame, that's the charting time frame I'm going to be using. But a lot of our members like to use it on different time frames or different hourly charts. Just experiment with it. That's one of the things I also teach my students. There are a number of ways in which to use this. Experiment with it. It's just a great tool that doesn't cost you anything, that is high probability, that doesn't rely on you being in a chat room and someone telling you what they think the market's going to do, or it doesn't rely on you waiting for the news to come out so that you can jump on board once the economic report comes out. This is the market. The only thing you really should be listening to, this is the market telling you which direction it's going to be going. So this is what I try to teach all of my students. The most important thing you should be focusing on is the market you're trading, not outside sources such as chat rooms or trading rooms or economic news. We don't focus on any of those at specialist trading. So this is what we're really concerned with. And then once again, it doesn't matter if you're looking at a 5-minute chart or a monthly chart. It applies on each time. Jerry asked, Steve, does this method work on the lower time frame, like the 30-minute or 15-minute? Yes, it does. I showed you how it worked on a 1,000 tick bar chart, which comes out to roughly less than a 5-minute time frame. So yes, you're going to get a lot more signals, and these trends are going to be smaller, but you're going to it still applies. You'll still see it. You may get whipsaw a lot more because as you go into a smaller time frame, you may be oscillating above and below that 50-period simple moving average. But it does work. I just showed you the example in the 1,000 tick chart of the Emini, and you saw it work very well. Let me see here. Jerry is asking, I still do not see any charts, only on your ad. I'm not sure what you're asking about, Jerry. I don't know what you're talking about where you don't see any charts. If you want more information on the strategies and what they are or how they trade the markets, I think that's what we're talking about. Go to protraderstrategies.com. Another thing I wanted to say as well, this presentation is going to be recorded, so you can request it again, and you can request a recording. We'll email it to you so that you can look over the strategies and the chart, everything, in case you're not understanding it fully. Okay. JJ asks, does this need to occur near the 50 simple moving average, or can it be anywhere? Well, that was, remember, Jerry, going over the rules. One of those bars has to touch the 50-period simple moving average. This is why it pays to understand how this works. We said that the two things you need in this are a 50-period simple moving average and that 2-bar pattern. And one of those bars needs to touch the 50-period simple moving average. That's a prerequisite to having this trigger take place. Okay. Yes, Sam, there's a recording of this presentation. Once again, you can email us and we'll send it out to you. Carlos asks, for this particular technique, the range of the previous bar has to be exceeded, correct? Yes. Well, the range to the high and the low must be exceeded, correct. Not considering the range of one of the bars bigger than the other one, right? Now, the second bar, in other words, you have 2 bars. You have today and you have yesterday. Today's range, not the open or close, but today's range must exceed, in other words, the high and the low must be higher and lower than the previous day's high and low. That's it. And one of those 2 bars, yesterday or today, must be touching the 50-period simple moving average. That's all you need. Okay. Do your courses carry a guarantee or a trial period, JJ? No, we don't carry any guarantees, because once you get our courses, you learn virtually all the rules. And we've had trouble with a lot of people who learn all of our rules and then basically sell them or share them with a number of people or a number of people on websites, or try to sell them. And so what we're giving you are, for really discounted prices, are 35 years, things that have taken me 35 years to accumulate, and you're getting them in a nutshell and learning how to use all of these tremendous techniques for really a minimal cost. So that's why we don't give you any guarantees. And you know, these are the things I can tell you that I use myself in my own personal trading. So they really do work, but we teach you in the courses how to minimize losses so that you don't have to worry about huge drawdowns. We also teach you how to extend your gains. So many people who have purchased our courses, even though I'm not going to guarantee this, many people, once they do begin trading, have made up the cost of the course in the first week or two, in the first couple of trades. So after that, they're just basically trading for free because they've already met the cost. So it's up to you, but no, we do not offer any guarantees, because once you sign on, you're a lifetime member and you're getting all the information for free. See, Kathleen is asking, does this trend remain in effect for a set period of time? It's a very good question, Kathleen. No, there's no way to know how long a trend will stay in effect. The only thing I can say is that once you see a trend taking place, that's where you need some type of viable strategy that you can rely on, that sustains you, that will take advantage of this. And that is a trend following strategy. So if there is a trend in place, you'll be able to get some really nice signals and some really nice entries. Once the trend seems to dissolve and it starts to run out of gas, a good strategy will not have you entering, because it'll sense that there is no longer a trend. So this is what we teach, and this is what we provide for our members here, strategies that trade with the trend. We're not trying to pick tops and bottoms, because in my opinion that's a recipe for disaster. So we're only trying to trade with the trend, and they only trade signals with a strong trend, and once the trend starts to dissolve, most of the time you won't even get a signal. So that's the beauty of it. Even if the trend is running out of gas, you won't be getting a signal in it. Let me see if some other questions here. You're more than welcome, Kathleen. Carlos asks, a very effective technique to use, especially if one is aware of the present market conditions. My personal take on it. Yes, and once again, I know I'm a little bit different from most educators, as when I speak, I like to give all of my attendees, and thanks for attending, I want to give everyone something that they can use, a technique, a tip, something that they can use. This isn't just a sales job where I'm trying to get you to purchase things. If you're not interested, if this is not your cup of tea, great. But at least you get a really nice technique that I use personally and that our members use to find the trend. So this is a great technique, and you can experiment with it. You can see if it works better in different time frames. You can see if it works better with different strategies. But this is my gift to you. You can start using this as soon as possible. But remember, the one thing I have to caution, this is where most people make the mistake, this is not, I repeat, it is not a strategy. If you see that 2-bar pattern and all the conditions are met, it's touching, one of the bars is touching the 50-period simple moving average, and if you see that in the next 2 bars after that 2-bar pattern, it is broken to the upside or downside of the outside day, well, then that's your clue that a trend is about to take place. But it is not your signal to enter the market. Remember, this is a trend following tool. This is not a signal to get into the market. It is not a strategy, okay? What range chart do you suggest, 4, 6, or 8? When you're saying a range chart, I wouldn't suggest any. Once again, experiment with them. I don't particularly trade range bars. It's up to you. But when I said you should apply it to a range bar, in other words, you can have a range bar up there, and that will show you if you have the brackets broken or not. Okay, it's really up to you. Once again, all of our strategies mainly deal with candlesticks, regular open, high, low, close bars, and such. Okay. Parmenter is asking, Steve, how successful have you been using this approach? Well, I've been trading for 35 years. I think that pretty much explains it. Not to be sarcastic, but everything I teach and everything we promote at Specialist Trading, I personally use. And so I've still been around for 35 years. Remember, it's the people that have been trading for 20, 30, 40, 50 years that have the simplest approaches. So if you ever go to a webinar where someone is speaking and they've been trading for that amount of time, most of their techniques are extremely simple because these are the things that work, as what I just shared with you today. It's the people that have been trading for 3, 5, maybe even 10 years that have the most complicated of plans because that's what they've been taught or meant to learn, that's what will make you successful. And in my 35 years, I've learned that it's actually the opposite. It's the simple things that will sustain you. And the meaning of success is not about how much money you make, but if you're able to trade 10, 20, 30, 40 years down the road. I know of a great many traders who I traded with on the floor who are no longer trading because they've lost everything. So it doesn't matter how much money you make. It matters if you have longevity to your career. And that's what we try to teach all of our students, and that's what we try to teach them with our consistent strategies, okay? You can trade it forever, but does it make money? Well, remember, once again, this is, as I stress enough, this is not a strategy. Only strategies and systems make money. Techniques do not make money. Techniques are only there for you to apply a strategy to it. Okay, so remember, this is not a strategy. A strategy is something you apply capital to, and that's what makes you money. A trend indicator is something that you use as a piece of the puzzle. All right, so I hope that's getting in. Remember, if you're thinking that this will make you money, you haven't understood what we've gone over today. You're basically, once again, going into that lower percentage of people that think that this is just a technique to enter and exit. This is a great technique for finding the trend. Most of the people lose money. Look at your trades that you've lost where you haven't been successful. Usually it's because you're out of sync with the trend. All right? So wouldn't you want a great simple technique that can get you in sync with the trend? That's what this provides you with. Okay? We have time for just a few more questions. While we're waiting for just a few more questions, remember, don't worry, once we conclude this presentation, don't worry, there are a lot more ways to reach us. If you still have a question, you can contact us by going to by emailing our VP of Research and Operations, that's Brett Marsh, at brettm@specialisttrading.com, or you can give us a direct call at 310-844-7220. All right, well, if there are no further questions, I thank you so much for attending today. Remember, if you are a current member of Specialist Trading and you already have purchased strategy number 4 and you're interested in another one of our great strategies, we will give you automatically a $200 discount on any applied towards any new strategy that we have. Once again, our strategies range in price from $400 or $500 up to $5,000. And also, if you're interested in purchasing strategy number 4, which we just showed you some of the current examples, we have a great discount on that. Call up or email us to find out how that limited time discount will take place if you decide to become a member. Thank you so much for attending today. Wish you the best of luck trading. Wish you the best of luck with this indicator and with this tool. And we'll see you next time. Bye-bye.